Hey everyone, what's up? So, I need to talk to you about something absolutely insane that's been happening in the markets. Like, seriously insane. We're talking about silver. Yeah, that shiny metal you might have in your grandmother's cutlery drawer. Here's the thing. On January 1st, 2025, silver was trading at about $29 per ounce. Nothing crazy, right? Pretty normal. But then, in just 1 year, it shot up to over $81 per ounce. That's a 180% increase. In 1 year. And get this. On January 6, 2026, silver hit a record high of $81.3 per ounce. Some overnight trading even pushed it to $83, $84. Then boom, it crashed 8% in a single day. People lost their minds. The internet exploded, and everyone's asking what the heck is going on with silver. My name is Josh, and this is The American Guy Finance. I know you've seen those viral videos about silver, but just like me, you noticed wrong dates and just made up stories. That's why we made this channel, to give you fact-checked information. So like and sub to let YouTube know you rather hear real info. Let's get back to silver, and I know what you're thinking. Is this a bubble? Should I be buying? Should I be selling? Is this the next GameStop situation? Well, that's exactly what we're going to break down today. We're going to look at why this happened, what's driving these crazy price movements, and most importantly, what experts think is coming next. Because, spoiler alert, some people are predicting silver could hit $150, even $200 per ounce. Wild, right? So stick with me for the next 25 minutes. We're going to cover everything. The supply crisis, China's export restrictions, industrial demand from solar panels and electric vehicles, the institutional money pouring in, and yes, we'll talk about those Reddit conspiracy theories too. By the end of this video, you'll understand exactly what's happening with silver and what it means for your money. Let's dive in. Okay, so let's start with what actually happened. Like I said, silver went from $29 to over $80 in about a year. But it wasn't a smooth ride up. This thing was volatile. Really volatile. The first thing you need to understand is that silver had been stuck in a range for years. Like, forever. It would bounce between $15 and $30, occasionally spiking but then always coming back down. Investors were frustrated. People who bought silver in 2011 when it hit $49 were still underwater. It felt like silver would never break out. But then 2025 happened. Throughout the year, silver started climbing, slowly at first, then faster. By the end of the year, momentum was building, and then in early January 2026, it just exploded. We're talking about moving $10, $15 in days. That's absolutely crazy for a commodity that usually moves slowly. CNN covered this surge, explaining why silver and gold have become especially popular investments. The reasons are actually pretty straightforward when you break them down. Number 1, inflation fears. Number 2, geopolitical tensions. Number 3, a weakening dollar. And number 4, which we'll get into more detail about, actual physical shortages in the market. But here's where it gets really interesting. This wasn't just retail investors buying silver coins and bars. This was institutional money, big money. Mike Maloney, who's one of the most respected voices in precious metals, mentioned that someone contacted him asking how to execute a $100 million silver purchase. $100 million. That's not your average investor. That's a fund, a family office, or maybe even a sovereign wealth fund. When you see that kind of institutional interest, you know something fundamental is changing. These guys don't move $100 million on a whim. They do serious research. They have teams of analysts, and they clearly saw something in silver that made them want to take a massive position. Now, the rally wasn't without its problems. Remember that 8% drop I mentioned? Yeah, that was brutal. Silver hit $84 and then crashed to the mid-70s in 1 day. People who bought at the top got crushed. Social media was filled with panic. Is the rally over? Did I just lose everything? Classic fear. But here's the thing about volatile markets. They shake out weak hands. If you bought silver just because you saw the price going up, that drop probably scared you out. But if you understood the fundamentals, that drop was just noise. Because the underlying reasons for silver's rise haven't changed. In fact, they've gotten stronger. So what are those reasons? Well, buckle up. Because we're about to go deep into the supply and demand situation. And trust me, it's wild. Honor Chartres the supply crisis, a 5-year deficit. All right, let's talk about supply, because this is where things get really interesting. And by interesting, I mean potentially explosive for silver prices. The silver market has been running a deficit for 5 consecutive years. Let me explain what that means. A deficit means more silver is being consumed than is being mined and produced. In 2025 alone, the deficit was estimated at 95 million ounces. That's huge. And when you add up the deficits from 2021 through 2025, you get a cumulative deficit of almost 820 million ounces. 820 million ounces. Gone. Consumed. Not coming back. Now, you might be wondering, where did that silver come from if we weren't mining enough? Well, it came from existing stockpiles, from reserves, from inventories that had been built up over years. But here's the problem. Those inventories are running low, really low. Think about it like this. Imagine you have a savings account with $10,000. Every month you spend $1,200 but only earn $1,000. So you're drawing down your savings by $200 per month. At first it's fine, you have plenty saved up, but after a few years, your savings account is getting dangerously low. Eventually you run out. That's exactly what's happening with silver. The industrial world has been consuming more silver than miners can produce. And we've been making up the difference by drawing down stockpiles. But those stockpiles are now critically low. Some analysts estimate we might only have a year or two of buffer left at current consumption rates. Ed Steer, another precious metals expert, said something that really stuck with me. He said, "The demand for physical silver is voracious. We're running into a supply and demand brick wall." A brick wall. That's the perfect way to describe it. Because when those inventories run out, what happens? Prices have to go up. A lot. To the point where either demand gets destroyed because it's too expensive, or new supply comes online because mining becomes super profitable. But here's the kicker. You can't just turn on new silver mines overnight. It takes years to explore, permit, and develop a new mine. Some estimates say it can take 7 to 10 years to bring a major new silver mine into production. So even if prices go to $100 or $150 per ounce, it's going to take years before significant new supply hits the market. And during those years, prices could go absolutely parabolic. That's what some of the bulls are betting on. They're looking at this supply deficit and thinking, this is a powder keg. And once it ignites, silver could make moves that seem impossible right now. Mike Maloney has been talking about this setup for years. He calls it one of the most unusual setups in decades. And he's not wrong. When you have chronic deficits, dwindling inventories, and increasing demand, you have all the ingredients for a major price spike. Speaking of demand, let's talk about what's actually consuming all this silver, because it's not just coins and bars. Industrial demand is the real story here. Industrial demand, the silent driver. Okay, so here's something that might surprise you. More than half of all silver consumption is industrial, not investment, industrial. That's a really important distinction. When people think of silver as an investment, they think of it like gold, a store of value, a hedge against inflation. And that's true. Silver does play that role. But silver is also a critical industrial metal. It's used in electronics, solar panels, electric vehicles, medical equipment, water purification, and increasingly in artificial intelligence infrastructure. Let's start with solar panels. Silver is essential for solar panels because it's the best conductor of electricity. Every solar panel uses silver paste to create the electrical connections. And guess what? Solar panel installations are absolutely exploding globally. Countries are racing to meet renewable energy targets. China is installing massive amounts of solar capacity. Europe is pushing green energy. Even the United States, despite political back and forth, is seeing huge solar growth. In 2025, for the second consecutive year, industrial demand represented over half of total silver consumption. Solar alone accounted for a massive chunk of that, and analysts expect solar demand to keep growing for years to come. Then there's electric vehicles. EVs, or electric vehicles, use significantly more silver than traditional cars. A typical internal combustion engine car might use 15 to 30 grams of silver. An electric vehicle, anywhere from 25 to 50 grams. And that's just for the car itself. The charging infrastructure, the grid upgrades needed to support EVs, all of that requires silver too. And we're just at the beginning of the EV revolution. Most projections show EV sales continuing to grow for decades. That means silver demand from the automotive sector is going to increase substantially. But wait, there's more. Artificial intelligence infrastructure. AI, or artificial intelligence, requires massive data centers. These data centers need servers, cooling systems, power management systems, all kinds of electronics. And electronics need silver. High-performance electronics actually need quite a bit of silver for connections, switches, and conductors. As AI continues to expand, and trust me, it's going to expand massively, the demand for silver in AI infrastructure is going to grow. Some analysts think this could be a major new source of industrial demand that wasn't even on the radar a few years ago. Water purification is another growing area. Silver has natural antimicrobial properties, which makes it useful in water filtration systems. As clean water becomes more scarce in many parts of the world, demand for silver-based purification systems could increase. Medical applications too. Silver is used in wound dressings, medical devices, and even some antibiotics. It's a small part of overall demand, but it's steady and growing. So when you add all this up, you see a picture of relentless industrial demand. And here's the critical point. Industrial demand is price inelastic. What does that mean? It means that even if silver prices go up, industrial users still need to buy it. A solar panel manufacturer can't just decide not to use silver because the price doubled. They need it for their panels to work. An automotive company can't skip the silver in their EVs. It's essential for the electronics. This is completely different from investment demand, which is very price elastic. If gold goes up 50%, some investors might say, "That's too expensive, I'm not buying." But a factory making electronics, they have to buy silver regardless of price. This price inelasticity means that as supplies get tighter, prices could spike to levels that seem crazy, because the industrial users will keep buying. They have no choice. Physical premiums have already hit extreme levels. What's a physical premium? It's the extra amount you pay above the spot price to actually get physical silver delivered. If spot silver is $80 per ounce, but you have to pay $85 to actually get silver coins or bars delivered, that $5 difference is the premium. During the recent rally, premiums exploded. In some cases, premiums were 10 to 15% above spot. That's a huge red flag. It means there's not enough physical silver to meet demand at current prices. Dealers are scrambling to find inventory. Mints are rationing. Refineries are running at full capacity and still can't keep up. This brings us to a really critical part of the story. China. The China factor. Export restrictions and global impact. All right, so let's talk about China, because China just threw a massive wrench into the global silver market, and this could be a game changer. On January 1st, 2026, China announced restrictions on how much silver producers are allowed to ship out of the country. They basically said, we need to keep more silver in China to protect our electronics manufacturing industry. Now, why would China do this? Well, China is the world's largest manufacturer of electronics. Smartphones, computers, solar panels, you name it. All of that requires silver. And China's government clearly looked at the global supply situation and thought, we need to make sure we have enough silver for our own industries. So they implemented export restrictions. This means less Chinese silver flowing into the global market. And China is a significant player. They're not the biggest silver producer, but they produce enough that restricting exports has a real impact. Investors freaked out when this was announced. The fear is that this could lead to a global shortage of silver. If Chinese supply is taken off the international market, where's that silver going to come from? Mexico is the world's largest silver producer, but their output is already spoken for. Peru is number 2. After that, production drops off significantly. There's also a geopolitical angle here. China restricting silver exports could be seen as economic strategy. If you control critical resources, you have leverage. In a world that's increasingly divided into competing blocks, resource control matters. Silver might seem like a small thing, but it's essential for so many technologies that restricting it gives you power. The market's reaction to China's announcement was immediate. Silver prices jumped, volatility increased, and analysts started gaming out scenarios where China's restrictions create a supply crisis in the West. But here's the really interesting part. China's own silver market went absolutely bananas. There's a Chinese fund that's a pure play silver fund, meaning it only invests in silver or silver-related assets. That fund saw such extreme gains that it hit its daily limit multiple times. In the Chinese market, stocks and funds can only move a certain percentage in one day before trading is halted. This fund was hitting those limits repeatedly. Then, the fund's manager issued a rare warning. He basically said, these gains are unsustainable. This is getting out of hand. And shortly after, the fund dropped by its daily maximum of 10%. That's the most it's allowed to drop in one day. Chinese retail investors had piled into silver in a massive way. There was speculation, hype, and a lot of FOMO, or fear of missing out. When the correction came, it was brutal. But it also showed just how much interest there is in silver globally, not just in Western markets. The China situation is ongoing. It's not clear exactly how restrictive these export controls will be long-term. But the message is clear. Resource nationalism is back. Countries are thinking strategically about critical materials, and silver just became a lot more critical. This brings us to another fascinating aspect of the silver story, the paper market versus the physical market. Jerker, the paper-silver market, shorts, squeezes, and speculation. Okay, this is where things get a bit technical, but stay with me because this is important. There are two silver markets, the physical market, where actual silver changes hands, and the paper market, where contracts representing silver are traded. The paper market is much, much bigger than the physical market. On the COMEX, which is the major commodities exchange in New York, billions of dollars of silver contracts trade every day. But most of those contracts never result in physical delivery. They're settled in cash. Traders buy and sell contracts to speculate on price movements, but they never intend to actually take delivery of silver. Now here's where it gets interesting. Some analysts believe that large banks and financial institutions have massive short positions in silver. A short position means you're betting the price will go down. If you short silver at $80 and it drops to $70, you make money. Ed Steer and others have pointed out that the current short positions in silver are enormous. They estimate it's equal to about 5.5 years of global production. That's insane. Think about it. If those shorts ever had to cover, meaning buy back those contracts, where would that silver come from? This is the basis for the silver squeeze theory. The idea is that if enough physical demand materializes and if paper shorts get squeezed, we could see a short squeeze similar to what happened with GameStop in early 2021. Remember that? GameStop was heavily shorted, and retail investors coordinated to buy the stock, forcing shorts to cover, which drove the price to the moon. Some silver bulls think the same thing could happen with silver. If industrial demand keeps growing, if investment demand picks up, and if physical supplies keep dwindling, the paper shorts could get caught in a trap. They'd have to buy back their short positions at any price, driving silver to triple digits. Ed Steer has said that when we hit this supply and demand brick wall, we could see triple-digit silver prices in a very short period of time. Some analysts are predicting $150 per ounce. Others are talking about $175 or even $200. Now, I have to be honest with you. Predictions like that sound crazy. Silver at $200? That would be a 400% increase from its early 2025 levels. It seems impossible. But then again, silver just did 180% in 1 year, and the fundamentals are arguably stronger now than they were a year ago, so maybe it's not as crazy as it sounds. Robert Kiyosaki, the author of Rich Dad, Poor Dad, has been very bullish on silver. After silver broke $80, he posted on social media, $200 next? With a question mark. He's been a long-time advocate of precious metals as a hedge against what he sees as a failing financial system, but Kiyosaki also warned about FOMO mania. He told people to be careful about buying at the top just because prices are going up. He suggested waiting for a crash or pullback before buying. That's actually pretty sound advice. Chasing a parabolic move is dangerous. You can get badly hurt if you buy the top. The paper market dynamics are complex. There are legitimate hedgers who use the futures market to lock in prices. There are speculators who are just trying to make money on short-term moves. And then there are the conspiracy theories about market manipulation. Speaking of which, let's address the Reddit elephant in the room. Reddit, Wall Street bets, and the silver controversy. So, you probably remember the GameStop saga from early 2021. It was everywhere. Retail investors on Reddit, specifically the subreddit Wall Street Bets, coordinated to buy GameStop stock and squeeze the short sellers. It was David versus Goliath, and for a while, David was winning. Well, during that whole saga, something weird happened with silver. Mainstream media outlets started reporting that Reddit users had moved their attention from GameStop to silver. They said the Reddit army was now rallying silver to an 8-year high. But here's the thing, that wasn't true. Or at least, it wasn't accurate. When you actually looked at Wall Street Bets, the members there were adamant that targeting silver was not their strategy. Many of them accused outsiders, including large hedge funds and banks, of trying to manipulate the narrative. They believed big money was trying to pump silver to drive up the value of their own silver holdings, and then blame it on Reddit. There were posts on Wall Street Bets saying things like, "We're not buying silver, this is a distraction, don't fall for it." The community was actually pretty united in saying that the silver story was not coming from them. So what really happened? It's hard to say for sure. Silver did spike during that time, but whether it was actually retail Reddit investors or something else is debatable. What's clear is that social media can amplify market movements. When people see a commodity or stock spiking and read stories about it online, FOMO kicks in. They jump in without really understanding what they're buying. Now, fast forward to the recent silver rally in 2025 and early 2026. Social media definitely played a role. YouTube videos about silver got millions of views. Reddit discussions about silver picked up. X, formerly known as Twitter, was full of silver bulls and bears arguing. But this time, it feels different. This time, the fundamentals seem more solid. It's not just hype. There's actual industrial demand. There are actual supply deficits. China actually implemented export restrictions. These are real, tangible factors, not just social media narratives. That said, social media does create volatility. When prices are moving fast, emotions run high. People make impulsive decisions. They buy at the top out of FOMO. They sell at the bottom out of fear. And that creates even more volatility. If you're thinking about investing in silver, you need to separate the noise from the signal. Don't buy just because everyone on Twitter is talking about it. Do your research, understand the fundamentals, and most importantly, have a plan. Know your entry point, your exit point, and your risk tolerance. So, what do the experts think is coming next? Chapter: Expert Predictions. Where is silver headed? All right, let's talk about where silver might be going from here. Because that's really what everyone wants to know, right? The bulls, people who think silver is going higher, have some pretty aggressive targets. As I mentioned, some are talking about $150 per ounce. Others are even more bullish, predicting $175 or $200. The case for these high targets is based on several factors: the chronic supply deficits, the industrial demand growth, the potential for a short squeeze in the paper market, China's export restrictions, and the general macroeconomic environment of inflation, geopolitical tension, and currency debasement. Mike Maloney has been particularly vocal about the setup. He says we're in one of the most unusual setups in decades. He points to the structural forces building underneath the surface: supply constraints, institutional buying, and historical gold-to-silver ratios. That last point is interesting. Historically, the gold-to-silver ratio has averaged somewhere around 15 to 1 or 60 to 1, depending on the time period you look at. Right now, if gold is around $2,500 per ounce and silver is around $80, the ratio is about 31 to 1. Some analysts think silver is still undervalued relative to gold and has room to run, but not everyone is bullish. The bears, people who think silver is overvalued, point to the rapid rise as a sign of a bubble. They argue that silver moved too far, too fast. They point to the 8% single-day drop as evidence that the rally is fragile. They also question whether industrial demand can really support prices at these levels. Sure, solar and EV demand is growing, but at $100 per ounce, won't some industrial users look for substitutes? Won't some applications become economically unviable? These are fair questions, and honestly, nobody knows for sure what's going to happen. Markets are unpredictable. There are too many variables, but here's what I think is important to understand. Silver is in a fundamentally different place than it was 5 or 10 years ago. The supply and demand dynamics have shifted. Industrial demand is real and growing. Inventories are genuinely low. These aren't just talking points, they're facts. Does that mean silver is going to $200? I don't know. But does it mean silver has more upside potential than most people realize? I think so. The key is to be informed and rational. Don't get swept up in hype. Don't panic when there's a correction. If you believe in the long-term fundamentals, short-term volatility shouldn't shake you out. Some experts expect silver to perform better in 2026 than it did in 2025. Given that it already did 180% in 2025, that's saying something. One more thing to consider is the broader macroeconomic picture. The macro picture: inflation, currency, and geopolitics. Okay, so let's zoom out and look at the bigger picture. Because silver doesn't exist in a vacuum. It's influenced by all kinds of macroeconomic factors. First, inflation. Even though inflation has come down from its peak in 2022, it's still a concern. Central banks around the world printed massive amounts of money during the COVID pandemic. That money is still in the system, and many people believe that inflation is going to remain persistent for years. Precious metals like silver and gold are often seen as hedges against inflation. When paper currency loses value, hard assets like metals tend to hold or increase their value. So if inflation stays elevated, demand for silver as an inflation hedge could remain strong. Second, currency debasement. The US dollar, despite being the world's reserve currency, has been losing purchasing power over time. Many investors are worried about the long-term viability of fiat currencies. They see precious metals as a way to preserve wealth when currencies are being debased. Third, geopolitical tensions. The world feels increasingly unstable. There are conflicts, trade disputes, and rising nationalism. In uncertain times, people flock to safe haven assets. Gold is the classic safe haven, but silver often benefits too. Fourth, the energy transition. Governments around the world are pushing for a transition away from fossil fuels and toward renewable energy. This requires massive amounts of materials, including silver. The International Energy Agency projects that demand for critical minerals, including silver, will increase dramatically over the next few decades. All of these macro factors support higher silver prices. They create a backdrop where investors and industrial users both want to secure silver supplies. But there are risks too. If the global economy slows down significantly, industrial demand could weaken. If central banks tighten monetary policy aggressively to fight inflation, that could strengthen currencies and reduce demand for precious metals. If geopolitical tensions ease, safe haven demand could decline. Markets are always about balancing probabilities. Nothing is certain, but when you look at the weight of evidence, the case for higher silver prices seems stronger than the case for lower prices. That doesn't mean you should go all in on silver. Diversification is still important, but it does mean silver deserves a place in a well-thought-out portfolio. Practical considerations. How to approach silver. All right, so if you're thinking about getting involved in silver, what should you actually do? Let me give you some practical considerations. First, decide what your goal is. Are you investing for the long term, believing in the fundamental supply and demand story? Or are you speculating, trying to catch short-term price moves? Your goal will determine your approach. If you're a long-term investor, physical silver makes sense. Buy coins, bars, or rounds from reputable dealers. Understand that you'll pay a premium above spot price, but you'll own the actual metal. Store it securely, either at home in a safe or in a professional storage facility. If you're more interested in speculating on price moves, you might look at silver ETFs or exchange-traded funds or silver mining stocks. These give you exposure to silver prices without having to deal with physical metal. But remember, ETFs and stocks don't give you the same security as physical ownership. Second, don't invest money you can't afford to lose. Silver is volatile, really volatile. It can move 10 or 20% in a matter of days. If you're putting money into silver that you need for bills or emergencies, you're setting yourself up for stress and bad decisions. Third, dollar cost average if you're not sure about timing. Instead of putting all your money in at once, spread your purchases over time. Buy a little bit each month. This way, you average out the price and reduce the risk of buying at the top. Fourth, have realistic expectations. Yes, silver could go to $150 or $200, but it could also pull back to $60 or $50 first. Markets don't go straight up. There will be corrections, pullbacks, and periods of consolidation. Fifth, be aware of taxes and regulations in your country. In some places, precious metals are taxed differently than other investments. Understand the rules before you buy. Sixth, be cautious of scams. When an asset is hot, scammers come out of the woodwork. Make sure you're buying from reputable dealers. If something seems too good to be true, it probably is. And finally, stay informed, but don't obsess. It's good to keep up with news and developments in the silver market, but checking prices every 5 minutes and reacting to every little move is a recipe for anxiety and poor decisions. Silver is a fascinating market right now. It's got all the ingredients for a major bull run, but it's also volatile and unpredictable. Approach it with intelligence, caution, and a long-term perspective. Conclusion. The silver story is just beginning. All right, everyone, let's wrap this up. We've covered a lot today. We talked about the incredible rally in silver, from $29 to over $80 in just 1 year. We discussed the 5-year supply deficit and dwindling inventories. We looked at industrial demand from solar panels, electric vehicles, and AI infrastructure. We examined China's export restrictions and their potential impact. We explored the paper market and the possibility of a short squeeze. And we even touched on the Reddit controversies and social media hype. So what's the bottom line? Silver is in a fundamentally different place than it's been in years, maybe decades. The supply and demand dynamics have shifted dramatically. Industrial demand is relentless and growing. Supplies are tight and getting tighter, and macro factors like inflation, currency concerns, and geopolitical tensions all support higher prices. Does that mean silver is guaranteed to go to $150 or $200? No, nothing is guaranteed in markets. There will be volatility. There will be corrections. There will be moments of doubt. But the setup is there. The potential is there. And for those who understand the fundamentals and approach it intelligently, silver offers a compelling opportunity. Whether you're looking at silver as a long-term store of value, a hedge against inflation, or a speculation on a supply squeeze, it deserves your attention. Just make sure you do your homework. Understand what you're buying and why. Have a plan, and don't let emotions drive your decisions. The silver story is just beginning. We're in the early innings of what could be a multi-year bull market, or we could see a correction and consolidation before the next leg up. Either way, staying informed and thinking strategically will serve you well.